In a housing market that's just full of uncertainty, there's one company out there that's playing a completely different game. So today, we're going to unpack the latest quarterly report from Toll Brothers, America's top luxury home builder, to see how they're not just surviving, they're actually thriving. So the big question is, right? How does a company that only builds high-end luxury homes actually perform when pretty much everyone else is worried about affordability? Well, let's dive right into their Q1 results and find out. And the short answer is they are doing exceptionally well. I mean, they didn't just meet Wall Street's expectations, they absolutely crushed them. Earnings per share came in at $2.19, way better than the 205 forecast. And revenue? Wow, $2.15 billion, completely blew past the $1.86 billion that was expected. That is a seriously strong start to their year. Okay, so those are the big, shiny numbers. But what's actually going on underneath all that? Let's get a clearer picture of what their performance really looks like on the ground. 25%. Just let that sink in. That's how much their earnings per share shot up compared to the exact same quarter last year, jumping from $1.75 all the way to $2.19. That's not just growth, my friends. That's some serious acceleration. And when you dig a little deeper, the story just gets better. I mean, look at this. They delivered almost 1,900 homes, which brought in $1.85 billion in revenue. The average price for their new contracts? It's over $1 million. And their gross margin hit 26.5%, which was even better than they predicted. Every single core metric is just firing on all cylinders. Seeing this kind of performance, especially right now when affordability is such a huge concern for so many, you just gotta ask, right? What in the world is their secret sauce? What's the core of their strategy? And here it is, straight from the horse's mouth. The CEO, Douglas Yearley, lays it out plain and simple. Their whole strategy is to cater to wealthy buyers, people who are way less affected by things like rising interest rates and affordability issues. It's like they've built this protective moat around their entire business. So just how affluent are we talking here? Well, get this. This number is really telling. Nearly a quarter, 24% of their customers in the first quarter paid for their homes in all cash. No mortgage, no financing, just cash. And here's another sign of just how financially stable their customers are. The contract cancellation rate was an incredibly low 2.8%. Now, what this tells us is that once these buyers sign on the dotted line, they have the money and the commitment to see it all the way through. That creates a super predictable, super stable stream of revenue. Okay, but if you really want to understand their customer base, look at this number. This is the average price for their first-time homebuyers. We're talking $670,000. For most of the market, that's a luxury price, a move-up price. But for Toll Brothers, that's the starting line for their well-off, often older millennial customers. So, we know who they're building for, but how do they actually manage their construction and inventory to serve these really discerning buyers? Well, turns out it's a very delicate balancing act. They basically have this dual strategy, and they're constantly balancing the two. On one side, you've got build to order. That's the full-on, custom dream home experience, and that's where they make their biggest profit margins, over 30% in Q1. Then, on the other side, you have the move-in ready spec homes. Now, the margins are a little bit lower on these, but they sell way faster, which turns that inventory into cash much more quickly. And what they've landed on is what they call a healthy 50-50 mix. They've split their business almost perfectly down the middle between these two approaches. It's the perfect balance of the super high profits you get from customization with the speed and cash flow from the ready-built homes. But here's the thing. Their spec strategy is really clever. They don't just build a finished house and then wait for someone to buy it. Their goal is to sell these homes really early in the construction process. Why? Well, because that gives the buyer a chance to go to their design studio and personalize all the finishes. And every little bit of personalization adds to the final price and boosts those profit margins. It makes a spec home feel way more like a custom one. All right, so a fantastic Q1 is in the books. But what does the crystal ball say for the rest of the year? Let's take a look at their official guidance to see what they're telling investors to expect. This quote from the CEO pretty much sets the tone perfectly. They're seeing a lot of positive signs as we head into the spring selling season, but they're not getting ahead of themselves. The official term for it is cautious optimism. Now, when you look at their margin forecast, you might notice that little dip they're expecting in the second quarter. But they're being very clear about this. This is not a sign that business is getting weaker. It's simply a shift in their sales mix. They expect to deliver fewer homes from their absolute highest margin areas in Q2. But then that mix is going to shift right back in the second half of the year, bringing their full year average right back up to a very strong 26%. So really, the key takeaway here is that they are confidently sticking with their full-year guidance. They still plan to deliver well over 10,000 homes at an average price just shy of $1 million, all while growing their number of active communities by 8 to 10%. Pretty solid. Okay, finally, let's zoom out for a second. Beyond just one quarter, what are the big, long-term fundamentals that Toll Brothers believes are supporting their business and really the housing market as a whole? Well, the leadership team over there believes they're being pushed forward by several powerful long-term trends. They call them tailwinds. You've got these huge demographic waves of millennials and Gen Z who are just now entering their prime home buying years. You've got the great wealth transfer from baby booms to their kids, years of stock market growth that have padded bank accounts, and on top of all that, there's still a fundamental shortage of housing in the U.S. And all of this supports a brand that just keeps getting recognized for its strength and its reputation. For the 9th time, Fortune magazine named them the #1 most admired home builder. I mean, that's a real testament to their position in the market. Which really brings us to our final question. In a highly unpredictable economy, Toll Brothers has made a very clear bet on one single strategy: cater to the customer who is the most insulated from any financial storms. So the real question is, have they successfully built a fortress that can actually withstand whatever lies ahead for the housing market? That's the billion-dollar question, isn't it?